I'll just start the recording and share my screen. I hope you can see my screen now. Is it visible?
Yes, JP.
Okay. So yesterday we were discussing this concept of taxes. We have discussed about accounts receivable parameters. Then we jumped into the tax module. So I gave you an introduction about how taxes are normally calculated in business, how they are represented. And I have given introduction about the tax direction, like sales tax payable and sales tax receivable. So tax payable is normally calculated on accounts receivable side on the sales that we make to the customers, and tax receivable is normally calculated on the purchases on the goods or services that we procure from the vendors. So I've also given you certain examples of how the calculation is done in the situation where the amounts include sales tax and amounts are excluded from sales tax. Then I think we have also we discussed that we will configure this basic setups that we have to be that has to be configured in tax module. So let us configure one by one. So the first thing to be configured is sales tax authority. Okay. So in order to configure a sales tax authority, I'm in the MRF legal entity. Go to tax module. So you can see this module tax, new module. This you have sales tax here. In the indirect taxes, you have sales tax. Under it, you have sales tax authorities here. You can create sales tax authority here. Click on that. And you can create an authority here. So what is an authority? Anyone have any idea what does it mean by authority?
Someone holding some sort of responsibility and as well as some sort of power to, to do something. Called
Authority is someone, or authority means power or some power in their hand that they hold, that they can control something. So here in this perspective, authority means some other or institution, so which normally controls the tax in a particular country or a jurisdiction or a state or something. So in India, we have GST authority, which normally controls the GST or goods and service taxes. So for income taxes or TDS, we have another authority, TDS authority. For TCS, we have TCS authority separately. Okay. In the same way, coming to US, you have federal authority, which is common for the whole nation. Then state authorities, depending on the state, the tax patterns and the tax calculations will change from state to state in US. Again, we have province taxes, so province authority will be there, or the corporations or municipal authorities will also be there at some situations. Whereas coming to different countries, you have different tax authorities. So it can be a single authority that controls the entire tax structure, or there can be multiple authorities depending on the various taxes. So you have tax authority, you have VAT authority, or you have the sales tax authority. Earlier in India, we have sales tax separately, VAT separately, and these duties separately. So that can be different authorities which controls all these things. But now in India, as we have only one authority, as GST authority, I'll just create one authority. So you can create multiple authorities also. That's not a problem, or that's always welcome in Dynamics. So I'll create an authority. Just give a name as GST. Okay, I'll just give it as GST authority, or you can give the full name if you want to. Then any specific code for identification, I'll just give it as GST here. Identification code. Okay. Then it asks me for a vendor account. So a vendor account is required. Actually, it's not compulsory, but we can give a vendor account, or it's a very good practice to give a vendor account here in the authority. So when you give a vendor account here, an invoice will be created automatically for the authority. So at that during the time of settlement, if the payable amount is more or the anything, if either the payable amount will be more or the receivable amount will be more. So anything accordingly, an invoice will be created to the authority. So normally how it will work is I'll show you. See, you have in regular business every day you do sales and purchases, right? So there will be sales tax receivable on your purchases. So you will make purchases, right? Out of purchases, you will pay taxes to the vendors. So those taxes normally recorded as sales tax receivable for you, the tax that you pay on purchases. And there is sales tax payable. So sales tax payable is something that you receive from the customers on sales. So this is how it is. On sales tax receivable will be on purchases and sales tax payable will be on sales. Let's assume that you have made purchases and the total sales tax receivable calculated on the purchases for one particular month. Let's assume for 1 month is like $20,000. Okay, total sales tax receivable is $20,000, or the amount of sales tax that you paid on purchases is 20,000. The amount of sales tax that you received on sales to the customers is like 25,000. Okay, here $20,000 that you paid to the vendors, $25,000 that you collected from the customers. Now what happens at the end of the period or at the end of that particular month or quarter? So if the amounts are like this, what happens? We do a settlement at the end of the period. Settlement means we'll take off the net amount out of this. So here the receivable amount is 20,000 and the payable amount is 25,000. When you take net of it, you will have 5,000 remaining, right? Remaining payable will be remaining because payable is high, right? So remaining tax payable is equal to 5,000. So 5,000 will be the remaining tax amount. So you have to pay this to the tax authority, right? So because you have collected excess tax or more tax from the customers and you paid only 20,000. So whatever is the difference amount is there that you have to pay to the authority. That's what we call here. So let's assume that the tax that you paid to the vendors was more compared to the tax that you paid to the tax that you collected from the customers. So you have paid more tax to the authority or to the vendors actually compared to the tax that you collected from the customers. So there is a 5,000 excess that you paid. So this will be remaining tax receivable. So what you will do is you will claim a reimbursement from the tax authority saying that I have paid excess of 5,000 on my purchases compared to the taxes that I've collected on my sales. Please reimburse the excess amount that I have paid to you. Or you will file a tax return for this amount. The GST amount that you have paid excess on your purchases, you will file a tax return and you will claim this amount from the authority. So in either of the situations where the tax is more or less anything, a transaction will be created for the vendor that you link here. So if it is a payment transaction where excess tax is payable or we have to pay to the authority the remaining tax that we collected from the customers. So an invoice will be created for the customer. Sorry, the vendor account that you give here, an invoice will be created. Invoice in the sense a payable transaction will be created, just like an expense rate tax payable will be credited, and I mean behind the vendor you have the tax account normally, or that account will be selected, and you will pay that amount to the vendor on that invoice that you will settle that amount and pay it to the vendor. Or if the excess amount is that you have to receive from the vendor, again an invoice will be created in a negative way or in a like a credit note, it will get created. Eventually you will receive the same from the on a reimbursement amount will be received from the authority and you can settle it with that particular payment transaction after recording that payment once after you receive the reimbursement. If you have to pay it to the authority or to the vendor, normally you will generate a check and pay, or they'll also accept challans right through bank. You can create a challan for the certain amount after you depositing into bank and you can give that challan or a check, anything will work. So that's how the calculation will be. Going further, we'll see how this will be apportioned and how the settlement amount will be shown up, which one is excess and which one is low and which is high. The consolidated amount will be shown up and the difference amount will be created as an invoice to this particular vendor that you give here. Okay. Just give this one vendor, I'll create it. We have 3 vendors or 2 vendors, I'm not sure. So there are 3 vendors, I'll create a new vendor. GST authority is the vendor name that I give. Group I can give here. If I have tax vendors group, I can select it as tax. So it is asking me to match the name. Actually, since I have the GST authority in other legal entities as a vendor, so it is asking me. So here I don't have any vendor, so I'll just create a vendor group as well as a tax group separately to group all the tax vendors. 0. Tax vendors. In terms of payment, I can say there is like 2 days of terms of payment. Sorry, net 5 days of terms of payment. Okay. So tax vendor. Just give it as tax vendor. You can fill other details again if you have to fill the details like the address and the contact details of any of the person in that authority place. You can give all those details. Other than that, you don't mostly have any. You can give the address details. That's all. So this is the vendor GST authority vendor that I created for the purpose of this tax authority. So I'll go back here and I'll assign the same vendor account that I've created, vendor number of GST authority here. Then I can select the report layout. Generally, once during the settlement of the tax, you will have a report. It will show you a clear report of how taxes are being settled, or how much sales tax payable, how much sales tax receivable is there on that particular period, and what is the net amount that will show up in that particular report. So that report does have different layouts. According to various countries, report was designed. Normally, you can select US report layout, which is common for most of the countries. But for other countries like German and Swedish and British, you have separate reports, as you can see. But I select US report layout here. Then you have rounding form. Normally, in case of if you want to round up the taxes to particular number, so you can give that rounding to which up to how many decimals it can be rounded off. You can give those details. I can give up to 1 cent. I can round it off. You have this normal, downward, rounding upward, and one advantage. Normal means it will round up according to the number. So either backwards or upwards. If it is more than half, or if it is less than half, it will round up to the previous number, or more than half, it will round up to the next number. In the same way, downward means it will always round downwards. Round up means it will always round up upwards. One advantage means so it will, according to your advantage, you can suggest it. So it has to be rounded upwards or downwards. Normally for payables, it will be sales tax payable, so it will come rounding less because you might pay less. For receivables, okay, it will round upwards because you might receive more. So that's how. I'll select normal and I'll just give round off as 1 cent. It's not required actually, but can give any, if at all the tax calculation, if at all the tax calculation is, the tax calculation is like in decimals a lot of times, you can round it off to the next numbers or the previous numbers like that. You can give an address here to the tax authority. Normally, you can give tax address to the tax authority in the vendor itself, here the vendor that you have created, or you can either give it here as well, the address details as well as the telephone numbers, extensions, mobile phone details, and the remaining email, SMS, internet address of the tax authority you can give here. So this will not override the details that are given in the vendor account. So whenever an invoice is created or paid, normally the details that you have entered in the vendor account only will be considered. Here the details that you give are only for maintenance purpose. It will not really affect anything in any transaction. the details here. Okay, so that's how I can create an authority. Let me know if you have any confusion in this or doubt in this authority part. Clear for all of you? Sushila, Naveen, Saideep.
Yeah.
Okay.
SJP.
Clear, JP.
Okay. Okay. Then, since this is created, we'll go for the other configuration that we have to do. Sales tax settlement periods. Let's create a sales tax settlement periods as well for the authority. So here I have sales tax settlement periods within indirect tax, sales tax only. I have this sales tax settlement periods underneath the authorities here. So I can create sales tax settlement periods. Just create sales tax settlement periods. Click on new. You can give the sales tax settlement periods as GST. Same, I'll just give the same name, GST settlement periods. So settlement periods, normally you can give how often you are going to settle your taxes with the authority. You can give that or define periods accordingly. If you are going to settle them on monthly basis, you can select or you can create monthly settlement periods. Or if you are going to settle it on quarterly basis, you can create quarterly settlement periods, or yearly basis. You can create each year as a settlement period. At the end of that year, you will settle the taxes. So most commonly they'll select monthly settlement period. So we can select the monthly settlement periods as well. And I'll show you how we can create many. So as soon as I create settlement periods here, it asks me which authority. So we only have one authority, right? So I'll select that authority here, GST authority. So here is where we are linking the GST authority to the settlement periods that you are creating. Okay, terms of payment, it is asking. You can give net 5 days terms of payment if you want to, so that once the settlement is done, you will pay it in the 5 days. If the excess amount is in payables, you will pay it in 5 days. Normally on receipts, it will take time, right? Or if it reimbursement, if we claim, it will take time. With their terms of payment will not be applicable. Next, we have period interval unit. So how often you are going to divide it on the basis of days, months, or years. We go for months and 1 month. Period interval duration. And use batch processing for sales tax settlement. Normally, this can be enabled so that sales tax settlement will run in the batch. If you disable also there while you are running it, you can enable the batch, no problem. Normally sales tax settlement, they run in batch at one period, so there will be a lot of transactions, right? It takes time, run the batch slowly and bring out the settlement amount at the end. So you can run it in the batch if you want to. And here coming to this creation of period intervals. So click on add, start creating your period intervals. I'll start it from, suppose I'll start it from 1st of March. Okay, 1st of March 2021. Okay, to date, 1 month, right? So I'll select April. Sorry, not April. It should be March 31st, starting from 1st March 2021 to 31st March 2021, or I'll start it from April, guys. Sorry for that. Start it from April to April 30, 1st April 2021 to 30 April 2021. So let's assume that my business and operations have started from this date. Okay. So I'll come to this point of blocked by settlement process by 1. So in this way, we can create monthly settlement period. So this is for the month of April. If you want it for the month of May, you can create one more here. By clicking on add, you can select the days, May 1st to May 31st. Or you can use this option, new period interval. So if you click on new period interval, it will automatically take the next month because you gave the period interval as 1 month, right? So next month will be considered automatically. See here, click on new period interval. It takes starting from 1st of May to 31st of May. In the same way, I'll keep on clicking it. So until 31st October, now November, December, January, February, March 2022. So for 1 year I have created, I mean monthly basis settlement periods I have created. So if you have posted any transactions normally, you can see settlement sales tax payments here or posted sales tax here. If you click on posted sales tax, you can see the sales tax payables or receivable that you have claimed on any transactions, but you don't have any rate, so it is showing empty. By period also you can see settlements per interval, how many settlements you have done per this interval, sales tax per interval, how much sales tax is posted per this interval. If you click on this and click on sales tax per interval, only for the month of April 2021, how many taxes that I have collected or paid will be shown here, or sales tax payable or receivable that I have posted on my invoices will be normally shown up here. So this is on when I select a period and select this option. But normally when I click here, it will show all the taxes that are paid using this particular settlement, sales tax settlement period and the authority. So starting from the dates that you give here, for what all the dates you have from April to March, 21st April to 22nd March, what are the tax transactions that you have posted, everything will be shown up here. So I'll come back to this page to show you again how the transactions will show up in these options and these options. Okay. And you have this option blocked by settlement process, blocked for settlement process by. If one of the user is working on this settlement process, so you can say that particular username you can give here, so that only that particular user will work on the settlement process of for that month, for tax settlement process or the GST return process, whatever you call. That user will work, or that user is working currently, as you can say, and no other user will again try to settle it. They can't settle it since it is blocked for settlement by only one user or particular user. So you can give it. It's not required to. You can give a specific user if you want to, who usually deals with the tax settlements. So this is how we can create sales tax settlement periods. So most commonly for one particular authority, we'll have one settlement period only, or one type of settlement period only, like this. For different authority, again, you can create different settlement period. I mean, if it is the same pattern also, you can create differently. I mean, another one with the same pattern, but for one authority, you can create only one settlement period, and for one settlement period, you can link only one authority. Remember that. So this is how we can create settlement periods in tax. So it's most common is months only. You can also create for quarterly, like you can give months and 3 year, or you can create yearly also, like year and 1 you can give if you want to. Anything will work. So if this is clear, yeah, we can move to the next topic. So is it clear for all of you? Settlement periods. Yes, no.
SJP.
Okay.
SJP.
Okay, if it is clear, then we'll go to the other one. Ledger posting groups. Ledger posting groups, or you can also call it as posting profile, whatever it is. So you have in all modules, right? Posting profile. Here also in tax module, you have this same posting profile called as ledger posting groups, where you normally link the main accounts to the tax module. So whatever the tax transaction that you do, that particular account will be picked. So for sales tax payable, you will give one account. For sales tax receivable, you can give one account. During the settlement, the net amount has to be posted to another account, right? So you can give that account as well if you want to. So let's see how we can create the ledger posting groups and different options available. If I go in here, I can see where is this ledger posting groups normally will be under setup here. So in tax module under setup, I see sales tax again. Under that I have ledger posting groups here. Tax setup, sales tax, ledger posting groups here. Click on ledger posting groups. So this is a configuration where we link the main accounts from general ledger module to the tax module. 1 second. So as you can see here, you can create a ledger posting group for your authority. So just click on new here. It is asking me the ledger posting group. I'll just call it as GST ledger posting group. Okay. So I have this. There are some accounts which we have to give as a mandatory or not. So you have to give the sales tax payable account and receivable account according to the Indian tax pattern. Sales tax payable, receivable accounts will be given. And coming to use tax expense and payable, I'll explain once again. No, I mean, I'll come back to that point. So you can create the sales tax payable account and sales tax receivable account and assign here. Settlement account also you can give. Settlement means the at the end of the period, like we have created settlement periods, right? At the end of that particular period, we'll settle the taxes. How much payable is there, how much receivable is there, and the net amount will be transferred to this account, whatever it is here, settlement account. So that account has to be created here. So let's create both, all the three accounts, tax account and the settlement account, all of them. So I'll just go to view details. So I can click on new, select a main account as tax payable account, or first I'll create tax receivable account, which is like 50,000. Tax receivable, say asset account since it's receivable. Save it. I'll create tax payable account 2,50,000. Tax payable, which is a liability account. Then I can create a settlement account, so it is also normally a liability only, or I can create it as an expense account also in our profit and loss account. I can create it as, so let me do it. Tax settlement, can say. So sorry, I should give the name here, right? Then I should give a number here. So I'll just give it as 3 series, something like 3,50,000. Profit and loss account, either it can be an expense or the claim amount. So it can be anything. So I'll just give it as P&L. Some people will maintain it as P&L. Some people also will maintain it as a balance sheet account. It all depends. So most commonly will maintain as P&L account because anyway the invoice will be created for the vendor, right? So for that. So then P&L account. So I'll close this form. For sales tax payable, I'll give the account that I've created 2,50,000 here. So click on show all, it will show it. For sales tax receivable, I'll give that account 1,50,000. For use tax expense, not giving it. Sales tax settlement account, I'll give it as 3,50,000. No, sorry, that's okay. Normally the balance sheet, I mean, for 3 series we have balance sheet accounts, right? But I created P&L account for that should be 6,50,000. That's okay. Let's assume it is a P&L account. So sales tax payable, sales tax receivable, I have explained you earlier in the previous class how sales tax payable and receivable will be calculated. Okay, settlement account, as I told you, at the end of a period when you settle the taxes to the authority, the net amount of payable and receivable will be posted into the sales settlement account. I'll show you that one as well. But there is one condition that we forgot actually. For these accounts, we need to give a settlement. I'll show you. For all the sales tax related accounts, we have to give this particular feature. So this one, tax payable account, right? Suppose I'll edit this. In the main account, we have to give this one, posting type, this one. Posting type we need to give as sales tax, this one. Remember, for all the tax accounts, we have to give it. So for the other account 1,50,000 also I'll give it the posting type as sales tax, and for also the settlement account I'll give the posting type 3,50,000 tax settlement account. I'll give the posting type as sales tax. In the main account, when you come down, you can see here posting validation. In that you can see posting type as sales tax because these accounts are used for sales tax, right? So you have to give it as sales tax for them. Okay, I have given them now. Perfect. So use tax expense and use tax payable are the prominent procedures that are followed in US, not in any other country. Mostly in US only they'll follow. Actually, in US they don't even follow the sales tax receivable account also. So if I show you, just I'll duplicate the tab. There is one parameter in the general ledger parameters under sales tax, which controls which accounts have to show up here. So I'll show you. Suppose if I go to general ledger parameters in the ledger setup. Within the parameters, I can see sales tax. So we have discussed. I mean, I said that we will discuss about these parameters later when we discuss on the sales tax module. So the time arrived. Here you can see this one. This parameter apply sales tax taxation rules. This one. So this parameter is disabled. If this parameter is disabled, I can see this accounts available. So these are the non-US accounting pattern, as I would say. These are the non-US accounting pattern system. Suppose if I go to ledger and enable this parameter, apply sales tax taxation rules, and if I save it here, if I go back out of this group and again reopen the group here, ledger posting groups. See, I can see only few accounts now. I can't see that account. Sales tax payable account and use tax expense account. Those two accounts are eliminated. Sorry, sales tax receivable account and use tax expense account. So this kind of pattern is specific to some jurisdictions in US, or particular states in US follow this pattern where they don't have this sales tax receivable because they don't pay taxes on the vendor invoices normally, but they don't pay amount on the vendor invoices. They'll retain the amount as use tax payable and they'll pay it later normally. So that's what the pattern is. So most commonly this is only followed. I mean, this will be disabled, and usually the other pattern will be followed. So I'll show you. So it will not appear like this. I have to save this. I have to get and open it. I should reopen it by closing it. So I'll just go back and reopen the ledgers posting group once again. Then I can see the sales tax receivable account and use tax expense and payable accounts are showing up here. Okay, this is how. So we will maintain this pattern only, or most of the customers also will follow the same pattern. This one. So we'll see what is use tax payable and use tax expense. So anybody have any idea about what is use tax? Yes, no. Okay. So I'll explain you what is use tax payable. Most common in US states. What use tax payable is. Suppose that if I'm buying any good from a vendor who is in a different state. Suppose let's assume in the Indian perspective, okay. AP we have, and I'll select Maharashtra, MH. So I being staying in AP, I am a business which is running in AP. Okay, my business is in AP. So the vendor is in Maharashtra. So I'm ordering some goods from the vendor who is located in Maharashtra. Okay. So in Maharashtra, for selling such goods, they don't have any tax levied. So in Maharashtra, they don't have any tax levied on such goods, whichever they are selling for me. So they don't have any taxes. So the Maharashtra, the vendor who is in Maharashtra will not allocate or will not assign any taxes on the invoice. So he says that there is no tax. You pay me the total amount of 1,000. So that assume that 1,000 is the total amount of the goods, and you just pay the total amount of goods. That's all. And he's not asking for any taxes or not levying any taxes because tax is not there on those goods in Maharashtra. But coming to AP, if you buy such kind of goods, you have to pay taxes to the AP government. Okay, since you don't have any taxes with the Maharashtra government, but if you are buying right, you or the business is located in AP. So since you are buying it, so you have to pay 10% tax to the AP government on the goods that you buy from the Maharashtra government. So on the same goods that you buy in Maharashtra, you don't have any taxes levied, but in AP you have the taxes that you have to pay to the AP tax authority. Let's assume. Okay, in that case, how it will be dealt? So the vendor will be paid with $1,000 only because vendor is not charging any taxes, and the inventory that you received is for $1,000 only. Then where come this 10% amount is apportioned, or how it will be recorded? So this is recorded as use tax payable. Use tax payable as 100, 10% on 1,000, right? So now which account to be debited, or this will be credit account, right? So normally when you record a vendor invoice, vendor will be credited, inventory will be debited, right? Or inventory or any other purchase expense or any expense account will be debited if it is a vendor invoice journal for normal expense or service related other than inventory. So this is the original invoice entry. When you have use tax payable in place, which you have to pay to the AP tax government, AP tax authority, then it will be recorded in this way. Inventory is again debited for that remaining 100. See, you have to pay taxes to the AP government, so that will be recorded as use tax payable here. And since it's a tax on either the expense or inventory only, so the inventory will be debited with 100 or added up onto the inventory. Or if there is any expense here like purchase expense or any other service related expense account, so that expense account only will be debited here for the use tax payable that you have credited. So this is how use taxes are calculated. So you will pay the vendor only 1,000 rupees in settlement to this amount or this invoice. But for this tax payment at the end of a period, you will pay this use tax payable to the AP government or the AP tax authority. So which eventually increases the inventory, or you will add it up onto the inventory only directly. So this is how it is. This is how the use tax payable is calculated. It's common in US, not in any other countries. Use tax payable. There is also this use tax expense account, which is use tax expense. So this is for the customer side, use tax expense. So what this use tax expense does is, this is a situation where customer is in a state where taxes are not levied on the goods. So suppose that you are in a state, you are in AP again, okay? Suppose you are selling goods, business is in AP. So you are selling goods to some customer who is located in another state like Punjab, okay? Is in Punjab. So customer is in Punjab. You are selling goods worth of $1,000. Okay, there is a AP government tax of $10%. But in Punjab, you don't have such tax. So it's only 1,000. So you don't have such tax on the goods that they normally buy. So the customer denies payment of the tax. So that in this situation, you have to bear the tax. You have to pay the 10% to the AP government on the sales normally. So that's how the tax amount will be calculated here. Normally in the use tax expense, you are the one who is liable to pay to the government again in the use tax expense also. So that's how it is. So this use tax expense and use tax payable is not common in all the areas. So I mean, in other countries only specific to US, that too specific to certain jurisdictions, they commonly use this use tax payable and expenses, which would normally retain the taxes by yourself, or the situations where in some states have taxes and other states doesn't really levy taxes. So in such situations, you are the one who is liable to pay the taxes to the authorities. So in that case, this use tax payable and use tax expense will come into place. So that's all. So in this case, what happens is you will record it like this. Normally revenue, right? A revenue account is normally not revenue account. Revenue account is created for 1000. Okay. Customer is debited for 1000. Revenue is credited for 1000. Then use tax expense is also debited for 100. Debited for 100. Then actually the revenue account is only normally credited, or the here if you would say the same use tax payable account only will be credited, I think so. So instead you can take any other tax payable account here as a credit for this $100. Normally you can't increase your revenue, right? If you increase your revenue, then it's a problem. It shows that you have earned more. So you can either increase the revenue or you can credit another account, use tax payable account, or you can credit any other liability account which you would normally be paying to the authority, right? So you can claim that liability account here and settle it with the authority later. The liability account will be reversed when you make the payment. So that's all about this use tax payables and use tax expense. So I'm not going to use this one, use tax payables and use tax expenses. Neither I'm not giving any vendor cash discounts and customer cash discounts. See, if at all there is a discount allowed on the invoice, will that discount be applicable to the sales tax payable on the invoice also can be given here. So if there is any discount calculated on the sales taxes also, that will be transferred to these accounts, vendor cash discount and customer cash discount account that you give here. Again, this will be controlled by the parameters here. This one, cash discount is calculated on amount including sales tax. This one, cash discount is calculated on amount including sales tax. So this is for vendor cash discount. This is for customer cash discount, or you have this option, deduct cash discount before sales tax calculation. So how the cash discount mechanism affects the sales tax calculation will be taken up here. Normally, sales taxes, you will collect complete sales tax amount on the invoice from the customers or vendors. If you are paying, you will pay normal total sales tax amount. But the discount you will get only on the base amount of the items, not on the taxes. So if the total invoice amount is 1100 including the taxes, so the discount will be calculated only on the base amount of 1000, not on the other sales tax 100. Sales tax 100 is a net amount or a sure shot amount that you have to pay to the vendors or receive from the customers. Some people will also calculate discounts or give some discounts on cash taxes as well. So in that case, the discounts will be posted, or the discount that you allow on the taxes will be posted to the accounts that you give here. So very commonly, very rarely they will use this discount account. Not mostly they'll follow or this practice of giving discounts on cash taxes. So normally they don't give discounts on taxes. They only give discount on the base amount of the item. That's all. So these are the three common accounts that we create, and I have created and given them here in this particular place. So this is how ledger posting group can be created. After creating ledger posting group, we have sales tax codes. So sales tax code is a common configuration that we have to do. So how much percentage of tax has to be calculated? So for each percentages and for different goods and situations and services, we have different tax codes and calculation. So we have GST 6%, 12%, or 18%. We have 2.5% SGST, 2.5% CGST. We have, so we have all this kind of codes, right? So we can configure these codes in Dynamics. Let's see how we can configure the sales tax codes in Dynamics. The next step, configuration of sales tax codes. So that will be here. And same in the indirect taxes. Under sales tax, I have sales tax codes here. This one. Create a sales tax code. Click on sales tax codes. So there is an empty one here. I'll just delete this one. I'll create a new tax code here. So just give a name. You can give it a unique name, or normally a unique code name will be given. Suppose if it is GST 2.5% or SGST 2.5%, I'll give it the same as GST 2.5%. So the same code name I'll give here, state GST 2.5%. Here it is asking me some mandatory fields. You can see, right? Settlement period. So what is the settlement period? GST settlement period. So in the GST settlement period, we have linked the authority already. In the settlement period, we have linked the authority, right? The GST authority to the settlement period. So it will be automatically linked to the code now. Then the ledger posting group we have created, right? Ledger posting group or the main accounts posting profile. So we will link that one to the code. So these are the two compulsory fields that has to be set up, and there are certain menu details. We'll discuss that part later. So first of all, I'll just give the settlement period and ledger posting group here. Okay, you have given 2.5% in the name, but here the percentage is showing as 0 here in this situation. So how do we add a value to the sales tax code? Let's see now. So when you click on sales tax code here, this one here, you have the option of values. So you can give values to the sales tax code. So I'll just click on sales tax code, click on values. So you can give from which state to which state this value is applicable. So first of all, I'll give the value here as 2.5%, right? So I'll give it as 2.5. Just remove it on 2.5. It will be the same. The decimals, it doesn't really matter. So 2.5% of tax. So the limits as well as the dates and the non-deductible percentages that we will discuss tomorrow, one by one. Okay. So this is how we can give a tax amount. So you can see this tax amount here, 2.5% here. So that whenever you apply this tax code, this 2.5% tax will be calculated. Either it can be an inclusive tax or a tax upon the base amount. So anything. So 2.5% will be calculated accordingly. So this is how you can give a value. I'll again create one more code. So just click on if. I'll call it as SGST. So this time I'll call it as CGST, central tax of 2.5% here. Give the same here. In the general, there are compulsory fields, right? Just give them GST, and to give the value, click on sales tax code, click on values. We'll give the same value here, 2.5, and save it. There is another tax code which I can create as IGST 5%. So if it is within the state, I mean, if it is, I think if it is within the state, we have this IGST calculation. I think so. I'll select this IGST and give it here, IGST 5%. Again, the same GST and ledger posting group I'll select, and I'll go to sales tax code and give the value here as 5%. So normally if it is out of state, I think we'll apply both SGST and CGST. So 5% will be applied, but it will be broken into two different calculations. So, but when it is IGST, it's a single calculation of 5%. So I can create few more codes like state GST 6%. I think we have this 6% SGST 6%, same settlement period, ledger posting group, sales tax values. I'll give this one as
6%. Close it. Then click on new, create CGST 6%. Sorry. Then settlement period, ledger posting group, sales tax code, values, give it as 6%. Save it. Okay. Can give one more like IGST 12%. So 6 plus 6 total 12%, which is calculated as an IGST. If it is a intrastate trade, so GST tax code, I'll just give in the values here as 12%. So like this, I can create sales tax codes as many as I can create. Again, I'll create 9%, 9% and 18% as well. That I'll do tomorrow. Okay. So this is how we can create the tax codes. So once after creating tax codes, we have this tax groups and item sales tax groups. So this is also a topic to discuss. We'll discuss it tomorrow actually. So tomorrow we'll discuss on the codes again. So the menu details within the code and the different options available here within the code. And then we'll discuss about the sales tax groups and item sales tax groups, which is here. Sales tax groups and item sales tax groups. Upon configuring all of them, tomorrow we will do some transactions in the accounts payable module, receivable module by applying taxes and see how the tax is being calculated. Okay. So practice until here. So it will be little difficult if I continue to explain everything in a single day. I just break it until here, and tomorrow we'll discuss the remaining part as well as we'll do some operations on the taxes. Okay, I'll just stop it until here. It's 46 minutes today.